So now is a good time for us to dive deeper into that economic opportunity that the Minister talked about, $1.9 trillion. And it's with enormous pride that I introduce the amazing Dr. Tang, New South Wales Circulars and Australia's first Chief Circular Economist, to discuss the circular economic opportunity. Thank you, Kame.
Thanks, Lisa, and it's lovely to be with all of you. And before we start, I'd also like to acknowledge the traditional owners on the lands on which we meet. I'd also like to pay my respects to elders past, present, and emerging. I'm coming to you from the lands of the Gadigal people of the Eora Nation over here in Sydney. Can I confirm that you can see my shared screen? Yes. Okay. Fantastic. So I'm talking very briefly today to set the context for investing in the circular economy. And what I'm hoping that we'll do is just talk through some of the trends and developments that we've seen over the last few years and really just set the context for the exciting panel discussions and the presentations that we'll see from subject matter experts in this area following this. So what we found is that over the last few years, there's been a really rapid increase in circular economy investing across a range of financial products and services. And there's a saying, follow the money and it'll tell you something about the economy. So what is the money actually telling us? Since 2019, we've seen assets in public equity funds dedicated to the circular economy alone grow 28-fold from US $300 million to almost $9.5 billion by the end of November last year. We've seen at least 10 public equity funds investing solely or partially in the circular economy that have been launched to date, if not more. We've also seen the annual issuance of corporate and sovereign bonds with a circular economy focus increase 5-fold in the last 2 years alone to December 2021. And we've seen at least 40 bonds issued in the last 3 years alone. And let's also talk about the number of private equity funds, which are up more than 10-fold, with total funds under management of over £2 billion as of now. So a lot of that has been happening globally, obviously, primarily in the American and European markets, which are several years ahead of us, I think, in maturity in sustainable financing and green financing. What we are really interested in is also looking at what's been happening in the Australian circular investment scene as well. Now, this is a little bit challenging to track because obviously we don't currently have any specified sectoral codes that define the circular economy or indices that focus on CE specifically. That's why we have some amazing expert speakers coming up later who will unpack this in further detail. So for now, I just want to focus on one subset of circular investment, and that's the amount of government co-funding going into co-investment for circular economy and resource recovery projects and businesses. This has been really ramping up in the last few years. And what is going to be really interesting is to see how much of a leading indicator this is, particularly with both governments and government policy aligned now in being one of the most important drivers of new investment activity in the resource recovery space. We've seen funds and initiatives like the Recycling Modernization Fund that's very purposefully and purposefully partners with the various state and territory governments to leverage private sector funding and stimulate private sector investment in resource recovery. Most of this activity has been in expanding recycling capacity in the 4 materials that have been targeted by the recent waste export bans. So we're looking at glass, plastics, paper and cardboard, and tires. And I want to unpack that a little bit more. We've got a few years now worth of data in terms of the investments going into the recycling of these materials over the last few years. And obviously, most of these activities focus on expanding the recycling capacity as quickly as possible, although there are smaller amounts of funds going into other sectors like innovative technologies and waste prevention. Here we see total co-funding by governments into improving the recovery of key waste materials on the export ban list. The caveat here is that it does leave out a few areas or materials where there is also significant government funding going into it because they're not part of the focus areas of the recycling modernization scheme. So organics is probably the most obvious omission from this chart, but we'll just focus on the materials here for the time being. If you break it down into the waste types, that have been targeted for increased recycling capacity, you'll see that plastics and paper and cardboard have received the largest co-funding from state and government funds and federal government funds so far.
Interrupt, sorry, it's Lise. We just can't see the second screen on the right hand of the screen yet. It hasn't revealed for us yet. We can only see the left hand side of the screen.
Sorry, are you referring to this?
Yes, thank you.
Yes, no, that's fine. That's actually quite deliberate, Lise. Talking through the story. So when you look through the additional processing capacity that these funds are creating, because in the previous left-hand side of the screen, we've seen the dollars going into those materials. Now on the right-hand side of the screen, we actually see the additional processing capacity that has been funded, and the profile changes a little bit. It's actually glass that's seen the biggest uptick in processing capacity, and that's probably not surprising because that's the first material subject to the export bans, which came into effect for glass 1st of January last year. Also interesting that paper and cardboard are up there because that part of the ban only commences in 2024, but it also makes sense because that's the largest component by volume in terms of waste materials that need to be recycled and diverted from the export streams. So what are the impacts of these investments? This chart shows us a breakdown of when these funded projects will come online, broken down by their material types. The data for the funding starts from 2020, with the projects really starting to come online from 2022 onwards. So this year is going to be pretty exciting. Obviously, this assumes that we are able to process up to the maximum capacity, which usually isn't the case. So this will be a little bit of the maximum or overstatement of the actual increase in recycling capacity. Glass will see the fastest increase in capacity from this funding. For plastics and paper and cardboard, a lot of this increased capacity will come online in late 2023 to 24. And we also looked at the potential emission reduction impacts of these investments. And here the profile is slightly different. A rough estimate, and this is a really rough estimate, it shows that the increased volume of recovered glass and tires potentially have the largest impact on avoided emissions. And again, if you wanted to, you can get a slightly different picture when you look at the estimated energy and water savings broken down by recycled material type. So far, we've only been looking at the materials on the export ban list, but really, these are just the tip of the iceberg. On this chart here, which is the typical Tang diagram that you see for waste materials, it shows you the source of waste, the sources of waste in Australia. So these are the various sectors as well as households. The breakdown of the materials that each of these sectors generate, which is the middle node. And finally, on the right-hand node, the ultimate fate of those wastes. And pleasingly, the largest chunk of the final destination of waste is recycling, but not so pleasingly, there is still a substantial amount of waste going into landfill. And if you look at that little blue part at the bottom there on the far right-hand side, you'll see that exports, as of just immediately before the export ban came into effect, accounted for only 4.4 million tons overall. So where to from here? If you break down the materials going into recycling, a lot of that's dominated by masonry materials. Then that just makes sense because these are measured by volumes, and masonry materials tend to be big, heavy chunks of concrete and brick and rubble. And those are relatively easily deployed into new construction sites, urban landscaping, and that sort of thing. What we really want to focus on, though, is the amounts of waste that's currently going into landfill. And here, the story is probably not so pretty. There is still a lot of organics going into landfill, as well as materials like paper and cardboard, plastics, and even metals. A lot of this is actually eminently recyclable. So for example, the amount of organics in Australia going to landfill is nearly 1.3 times our annual waste export volumes. So these are things which are rightly the target of a policy focus and of infrastructure investment focus in the years ahead. And this is an area that really needs to be addressed, because we're talking about, landfill capacity in metropolitan Sydney alone that's going to run out in the next 15 years. So we do really need some urgent solutions to these problems. Where do we see some of the big opportunity areas for resource recovery, infrastructure, and markets? We looked at where Australia needs to do a bit more work to improve our materials productivity. And we've identified two broad categories of materials where we see significant opportunity and also a need for action. One is what we call high potential materials. So those are high volume waste materials with large environmental impacts, but challenges in contamination and processing. So this is where current recycling is still very far from realizing the full value of those materials. And some of the examples of these materials are your metals, your plastics, your organics, and paper and cardboard. And then we've identified a second category of materials, which we call future stars. These are complex, high-value waste products with strong growth projections, but they have very limited recycling options, so they often still land up in landfill. This is where innovation and investment in the design, the recycling, and materials productivity uplift can realize significant value. And we're talking about materials like e-waste and subsets of e-waste like solar panels and batteries in mobile phones and the like. And moving beyond just recycling, there are also significant opportunities in the broader circular economy and decarbonization initiatives in key sectors in Australia. Here in this slide, we've summarized a couple of recent studies by KPMG and PwC on the potential economic payoffs of CE investments or interventions in specific sectors. While the results vary because these studies have looked at different timeframes and different types of interventions, we start to see a trend of a very clear payoff from unlocking the circular economy in a few sectors. And these are primarily the built environment, industry, transport, and the food sectors. These are the sectors where you will consistently see very high value add from designing out waste and pollution and emissions and maximizing the use of these resources in the economy. So I do realize we've moved really quickly from talking about waste to opening up a much bigger issue, which is how do we define the scale and the scope of circular economy investment? And that leads us to a series of further questions as well. We know there are compelling reasons to look beyond materials on the waste export ban list, if for no other reason, simply for the fact that we can't keep extracting virgin material to make goods and then eventually dumping it in landfill. But is the circular economy still primarily viewed by investors as being about waste? We know that recycling is the start, but not the end of circular investment. And then that leads us to another question on what's the investment thesis for investing in the circular economy and how do we measure its impact? So on that note, that leads us to the next session, circular investing, where we'll be unpacking these issues in slightly greater detail. And I am delighted to have on the panel with me for circular investing three remarkable individuals who are experts in this field. We have Ian Learmont, Mark Moody, and Blair Adams. I will just give all of them a very quick introduction before handing over to them to introduce themselves and their organizations in a little bit more detail. I'll start with Ian. So Ian is CEO of Clean Energy Finance Corporation and has more than 30 years experience as a financier and investor, having worked in Australia, Hong Kong, and Europe across clean energy and major infrastructure projects, as well as pioneering social impact investments. Mark Moody is Executive Director of Morrison & Co., a purpose-driven infrastructure investor with total funds under management of approximately $20 billion. And Blair Adams is Executive Director at Pollination, a specialist climate change advisory and investment firm, solely focused on accelerating the transition to net zero and a climate resilient future. Welcome, gentlemen. If I might just hand over the virtual mic to Ian to start off with, to just tell us a little bit more about yourself and your organization and what you do.
Thank you very much for that introduction, and it's a pleasure to be here at the New South Wales Circular Conference. And yes, Ian Lammont's my name, Chief Executive Officer of the Clean Energy Finance Corporation, which is the Australia's, I guess, effectively Australia's green bank, which was established some 9 years ago by the federal government to invest quite broadly in the clean energy sector. So we have $10 billion of taxpayers' money to make both to finance the sector and also to make equity investments. So really a broad range of capital options at our disposal, and a very, I guess, a very flexible investment mandate, from renewable energy to energy efficiency to low emissions technologies. And over the course of our 9 years of investing life, we have now made cumulative investments now in excess of $10 billion. So it's really been, just a tremendous story of the use of capital to assist with the the clean energy transition here in Australia. And of course, we've made very substantial investments in renewable energy, wind, solar, batteries, both utility scale batteries and household batteries. We've invested in the built environment, agriculture and transportation, electric vehicle charging, trying to introduce energy efficiency practices in industry through the change of the way industry is operating in the way which is of course a very substantial emitter in a difficult to abate sector. And of course, we have have an increasing focus on recycling and the circular economy, which of course is the very important topic of today. I'll talk a little bit more about some of the specific transactions a little later, but needless to say that the government has directed us to invest $100 million in recycling, and we've made some initial investments in that space around in plastic bottles, in e-waste and other areas. But we're also focused on embodied carbon in the built environment and building out properties here across the countryside, as well as the technology of the circular economy and the technologies involved in the recycling of batteries, particularly car batteries, which of course will increasingly, as Australians take up EVs, will become an issue for us. So maybe I'll pause there, Carme, and hand it over to my esteemed panelists.
Thanks, Ian, and we look forward to hearing more about those investments that you alluded to. I might just hand over to Mark.
Great, thank you. Look, and apologies for the boring background. I realised I've probably let down our marketing department there, but hopefully I can make up with content. Thanks, Ian, for the handover, and thanks, Carme, for the opportunity to speak today. It's very exciting to be part of the debate and actually to get up to speed, around how others are thinking about the circular economy. Morrison & Co, we've been around for over 30 years and have been, I guess, quite an innovative infrastructure investor over that time, often sort of leading, the investment of in new areas of infrastructure or new frontiers. And a lot of that's, largely focused on investing in businesses that really do sort of enhance the lives of communities and address key societal needs. It's probably one of the key sort of purposes of our organisation is to invest in ideas that matter. And I think we can all agree that the circular economy is certainly an idea that matters. The clients that we invest on behalf of, and I think you mentioned interest of over 22 billion as of today, sovereign wealth funds, the Australian superannuation funds, and other pools of private and public capital. And look, they're all, as Ian would know, and Brer as well, all looking for opportunities that are ESG related. And I think, the circular economy and the transition and the investment that's required to facilitate that transition is just a, really exciting opportunity for everyone. So look, I'll pause there, conscious I'm sure time's an issue, but I'll hand over to Brer.
Thanks, Mark, and thanks, Carme, for the invitation. It's really fantastic joining the panel today. Great to be on this panel with Ian and Mark. My name is Brewer Adams. I'm Executive Director with the firm Pollination based here in Sydney. So unlike Morrison & Co., Pollination is a relatively new firm. We've just been around for a bit over 2.5 years now. As you said, Carme, that the objective for Pollination is to focus only on decarbonisation, advisory and investments. And so the firm today is about 140 people strong, with offices in most of the cities in Australia, in the UK, Europe, and 2 offices in the US. So we're a global firm. The majority of the team are focused on the advisory side. Phenomenal amount of work for typically large listed corporations, providing advice on decarbonisation risks and opportunities. And also, I should say, to government. So we've done quite a big body of work for various state governments on net zero strategies, including zeroing in on opportunities to really accelerate circular economy. My work is on the investment side, and so Pollination is building its funds management business. The first real flagship fund for Pollination is a JV with HSBC, focused on what we term broadly natural capital. So that JV with HSBC is raising a fund to invest in sustainable timber, sustainable ag, sustainable forestry, and also biodiverse and nature-based opportunities. We're also bringing to market later this year a climate growth capital fund, which will invest in private companies with technologies that will accelerate decarbonisation, typically in the hard to abate sectors. So for us, that's heavy industries, energy management, transport and e-mobility, circular economy, and then food and ag. And that fund is focusing globally with a healthy pipeline, predominantly out of Europe and the UK and US and Australia. So yeah, great to join you. Perhaps I'll pause there.
Thanks, Brewer, and we would love to hear more about the fund as well as the discussion progresses. But before we jump into the actual panel discussion per se, I'd like to remind the audience that you can put your questions to the panel through the Q&A function on Zoom, and please do so, and we will attempt to monitor that and pose the questions to the panel as they arise. So I guess a suitable opening question for all of you is, how do you define circular investing, and what does it mean for you? Because this is a question that very often arises when you talk about investing in the circular economy. And everyone has a slightly different interpretation of what that means and why they are doing it. So this is a question that I'd really like to pose to the entire panel. And perhaps starting with you, Ian, if you could share your thoughts on what that means for you and what are some of the opportunities for investors at present?
Thank you for that. Yes, look, for us, I guess we have primarily focused on recycling and resource recovery as in some ways the more immediate definition for us around circular economy. In many respects, because I guess that's where investment opportunities and financing opportunities have presented themselves to an organisation like us. So that, you know, the CEFC is there with its capital, trying to play a role where the private sector is still not yet, you know, comfortable to make those investments, or it needs, you know, needs us to come in a particular way into a transaction to reduce the risks, so to allow private sector investors to participate. So that's.
Sorry,
I accidentally went on mute there. Apologies for that. And examples, I guess, of transactions on using, you know, that in some ways that definition have still been quite broad. So we're involved in limited recourse financing with a joint venture between Cleanaway, the Pack Group, and Asahi Beverages, which is a PET recycling plant in Albury-Wodonga, which is recycling the equivalent of something like 1 billion PET bottles a year. And so, you know, really excited about, you know, a project like that. And, you know, I suppose that the angle that we brought to that was being able to take a view on the revenues that come from that particular project without necessarily recourse to the joint venturers themselves, which was something that, you know, some of the other financiers struggling with. Other investments or transactions have been involved in recyclers like Busy and Cleanaway, who have been acquiring capital equipment to help with the efficiency of recycling. And sometimes that equipment, of course, often coming from Europe, expensive to get the business cases to work, often needing long dated and you know, finely priced capital, which we've been prepared to provide if we felt that that may have been, you know, a swing factor in players like that investing in that sort of equipment. As I guess I also mentioned in terms of kind of on the recycling side of batteries, which of course, you know, household batteries are you know, emerging in this country, but the, you know, electric vehicles will increasingly be providing you know, batteries that will come to the end of their useful life, and we have to work out what to do with those predominantly lithium-ion batteries. Re-Electrify is a technology company that we invested in Victoria. In that case, more a venture capital style investment. You know, put kind of $4.5 million into the company to allow it to grow, and it's been taking EV batteries from EVs, and it's been recycling those and giving them a second life, either in commercial and industrial application, or in fact even in a household application. It's you know, it's teaming up with some of the Japanese battery manufacturers, some of the electric vehicle providers, and I think increasingly, you know, we need to direct our attention to assets like that, as well as, you know, you touched on solar panels and PVs, no doubt we'll talk to it. That's in some ways a bit of a sleeper across Australia. Australia has many, you know, thousands, hundreds of thousands of rooftop PV panels, and you know, they all come to the end of their useful life. We're going to have to work out what to do with it. But anyway, that's a bit of a flavour of our interpretation of some of the transactions we've done. So I'll maybe pause there.
Thanks, Ian. Mark and Brer, any thoughts on the concept of circular investing?
Yeah, it's interesting. I mean, I've been on a bit of a journey over the last, say, 5+ years, and actually Carmate sort of mirrored the structure of your presentation. So initially, for myself, circular economy was very much waste. You know, it was the adoption of the waste hierarchy and that transition from, I guess, a linear waste value chain. But certainly my understanding has increased over time, such that, you know, the circular economy is really about capturing the resources that are available to a community and, you know, maximising their reuse within that community, and, you know, and the efficiency of that. So, you know, if we think about where we've invested behind that, I mean, Altogether Group is the best example. I mean, Terry Leckie spoke yesterday, and actually I just caught up the Q&A feed. I think the first question was, does anyone invest in sustainable regenerative urban development communities? Yes, we do at Morrison & Co. So, you know, we invest in deploying recycled water plants throughout land and housing communities in New South Wales. You know, we've got water treatment plants in large high-rise environments, which reduce the potable water requirements in those communities by 70%. And there's also huge energy saving costs, because you're not pumping sewage from the fringes of the network and out of Sydney to the ocean. You know, so I think energy is another good example. I mean, we've, I guess, Morrison got a long track record in energy transmission, retail, generation. But, you know, what we see through our embedded energy network retailing business, it's almost akin to a microgrid type, where, you know, you're able to deploy, you know, cutting edge, market leading, you know, global best practice technology and methodologies in communities, such that, you know, you're harnessing, you know, low hanging fruit, such as all of the buying power in that community. But you're also able to, you know, to make, you know, quite material investments in energy efficient infrastructure that delivers a real efficiency dividend, and, you know, and creates value for that entire community, which we were able to share with them through a lower tariff. So absolutely, we've got a really strong appetite across any essential service, whether it be water, energy, waste. Waste is obviously very much is of great interest. Obviously for Ian, it's flagged that as well. We've been looking at waste to energy. We're assessing a number of live opportunities in organics. The real catalyst for there is the transition to FOGO and the adoption by FOGO by councils across Australia. Now, that's a great catalyst for a large infrastructure requirement to support that increased diversion, but B, the right sort of commercial frameworks, commercial model to support that investment. So we try to think about the circular economy very broadly, and that's why I was sort of quite interested in your presentation, Carme, because it did make that transition from sort of waste as to all these other sectors where you can apply those circular economy principles.
Yeah, and I think you both talked about the application of circular economy principles in sectors that go beyond waste, like in the built environment and transport and mobility, and those are, I think, really important catalysts for us to think about circular investing. Brer, did you have some thoughts on this question?
Sure. Very, very similar comments. We think of circular economy now as a very mainstream topic. Perhaps 10 years ago, it was really seen in the prism of just reuse and recovery and typically a waste-focused sector. We think of it very broadly. In fact, one of the first investments that was done out of our fund, Climate Asset Management Fund, which is that JV with HSBC, was an agricultural investment in Spain into a series of projects that were fundamentally moving from low value cropping to higher value permanent cropping, where the business case was entirely predicated around improved water recycling, water reuse and retention, reducing chemical runoff and building up carbon stocks in the soils. And so that's just a good example where we think of circular economy in a very broad sense, where almost all of the step ups in value that are being achieved on that transaction are around circular economy interventions. Another one which we're looking at currently, which I'm very excited about, is an investment into a data center technology where the intervention is to use a liquid immersion technology in order to really drive down energy costs, 90% reduction in water use, and a 100% fundamentally biodegradable component. So that sort of sits in the energy management bucket, as well as very much in the circular economy bucket. So yes, we think of it as very broad as well.
Thanks, Ber. I'm actually loving the diversity of examples of the investments that the three of you and your organizations have been making, because you've actually really traversed a whole range of different sectors and areas. Data centers is a really interesting example. I read somewhere that, the amount of energy that's spent mining Bitcoin is equivalent to the amount of energy that the whole of Australia uses in a year. So it's just amazing that all of the stuff that we're depending on, to run our Zoom sessions and everything like that, it all adds up to contributing to this really growing sector. One thing that I wanted to pick up on was a comment that Ian put just now about, solving some of the wicked problems around the switch to renewables. And we're talking about the stuff that the enabling technology behind the shift towards decarbonization and the shift towards renewable energy. A lot of this technology requires valuable materials to construct your batteries, to construct your solar panels, to construct your grid systems and cabling and things like that. And they also pose challenges for us, because we're talking about new products and services where we are still very reliant on the extraction economy. I wonder whether that is a consideration for you when you're forming your investment thesis. And I also wonder, more broadly speaking, whether there are other challenges which are top of mind for you when you're talking about investing in the circular economy or investing in the green economy. Would anyone like to provide your thoughts on that question?
Maybe I'll offer a few just initial thoughts, Carme. I think increasingly, particularly in the solar and household battery sector, certainly for us, we're increasingly thinking about the implications of the the kind of end of life implications of those investments, as equally as people are increasingly thinking about modern slavery issues. I know that's a topic we're kind of, it's a whole new topic that I'm kind of throwing in there, but a very, very significant one, and is having a huge impact globally on the on the solar industry. But yeah, I think that's right. The amount of lithium-ion batteries that are going to be out there over the coming decades, it's just phenomenal, which is why I suppose people are thinking about other technologies like flow batteries. But yes, the extraction of resources, I mean, we've seen it for some time in the e-waste sector, extracting copper and gold and other other resources from those sectors. It's difficult. It's getting the economics of that to work. Often there needs to be a product stewardship program to help with it. You're subject to global commodity prices. In some cases, prices kind of fall. There's not really an incentive to go through that effort. So there are quite a number of challenges, I think, with some of those issues.
Mm.
Yeah. Look, at the risk of being provocative, actually, because we do distinguish rightly or wrongly between decarbonisation and circular economy. And when I say we, Morrison and Co, and we're certainly not experts in this space, so maybe being a bit lazy in our terminology, but the way I position circular economy opportunities, it's almost as though decarbonisation is really well understood, the challenge of global warming. And the way I talk to people about the circular economy opportunity, it will get the prominence of decarbonisation in time. So look, as a sort of, that might be a little bit off piste or incorrect, but some to a large extent, I think decarbonisation steals a lot of the oxygen of circular economy, and they have to work in together. And Ian's right. And to come to your opening question, Kame, we have a really strong ESG considerations just built into our investment thinking and our investment approval process. It's not an additional layer. It's actually just a core part of any assessment. So, when you are making investments, as Ian said, you will absolutely be thinking about end of life considerations and impacts. And look, I'm sure that's the same for you, Rhea, as well. And I think
Mark,
a significant change in the investment industry over the last 5 years in particular, which CFC's played a large role in leading.
Yeah, Mark, I was going to jump in and concur. We should be trying to find points of controversy, but I completely agree. I think circular economy is all about minimizing those broad sweep of externalities that broadly have a negative effect. So for pollination, we spent a lot of time building out ESG tools, particularly in nature and biodiversity impacts, which also picks up water, and to Ian's point around labour impacts and modern slavery impacts. And we're seeing a big trend on this topic. BHP was in the media just on the weekend with a big piece around how they want to lead on supply chain traceability across all of those themes, so that customers can forensically understand impacts across commodities. So we're also seeing that in terms of LP, so investor discussions, wanting us to really be granular about all of those ESG impacts and circular economy impacts.
So, Brad, just picking up on that point, what are investors really looking for when they are investing in a circular economy fund, and how would you report back to them on progress and performance beyond your usual sort of financial performance indicators?
So perhaps two comments I'll make. One is on the nature and biodiversity impacts. That's an area where Pollination's really spent a lot of time developing a very granular impact on impacts to the natural environment. So that's a point of difference, we think, for our fund. And of course, it ought to be, given the first fund with HSBC has that strong nature and natural capital focus. But my second point is, the best in breed funds are all doing a great job on improving their ESG reporting. Obviously, Morrison and I'm sure are terrific examples of that. What we're hearing from investors is a real question around how to differentiate between all of the universe of funds that are positioning well on the topic, and how to sort of get, you know, a sort of, I don't want to say more standardized view, but a little bit more rigor and definition into the environmental or ESG impacts, so that LPs can, you know, more forensically differentiate among funds. So one sort of example of a metric we are spending more time thinking about is how we can demonstrate to investors our screening process around prioritizing investments that are sort of best in breed across all of these sectors. So it might be, for example, on carbon, that we're favoring companies that are, you know, in the top or the bottom 10% on cost curve, for the highest impact, for example.
Thanks, Brer. And just for the benefit of the audience, LPs referring to limited partners who are the investors in the fund. Yep. Thank you for that. I think that relates to one of the questions that's come up from the Q&A chat as well, which was the question on what are your primary investment indicators in relation to circular economy. Well, it asks about in relation to circular economy infrastructure. So I think that's probably a slightly more specific question than just fund performance overall. I wonder, Mark and Ian, whether you had any thoughts on responding to that question.
Do you want me to take that? I see you're on mute. Maybe that's the signal. Look, I guess, look, what infrastructure investment obviously is a large upfront capital investment that you need to derive a return over a long period of time. So you really are looking to quite a robust commercial and technical model, and I think that's probably been the challenge that we've faced when we've looked at a lot of opportunities, not just in waste, but across the circular economy and where those principles might be applied. There's often you're talking about, not say unproven, but maybe unproven or yet to be adopted in Australia technology. So you're quite reliant on understanding how this technology is performed in reference projects overseas. And then there's always those issues. Well, how does that adapt locally? How does that adapt to local waste streams, etc.? So there is a lot of technical risk quite often that needs to be assessed. But overriding, what's the commercial framework that really supports this sort of long-term cash flow that is going to give you, your return on your large fixed upfront capital investment. So, we're not just looking for 2 or 3 year payback periods here. It's going to take a lot longer. So I think that's the challenge we faced, and governments can have a role to play. I mean, obviously, a lot of the diversion that you're seeing in waste that supports waste to energy or increased recycling, it's the economics of that are underpinned by the waste levy, which makes landfill uneconomical. So, to a large extent, you do need some sort of catalyst, whether it be through levies or subsidies, or quite often to sort of bridge, a period of time until we're fully transitioned to a circular economy. And the playing field is more level between circular economy approaches and old world approaches, which they've pretty much obviously recovered their fixed costs over the last 50 years of operating a landfill, and it's all marginal costs that need to recover from that point on.
Maybe just to add to that, I mean, I think it depends very much on what sort of investment you're making, but when you're working with waste streams, you really need some regulatory environment in a way to incentivize, or to kind of drive the investment. And we see that with gate fees, of course, with waste, with waste that's avoiding landfill, because if that wasn't the case, very difficult to get those business models to work. Whereas if you look at another entirely different investment, for example, an investment we made in a retirement village in Canberra, which was a reconfiguration of an existing office or commercial office development, which meant that there was enormous savings through the embodied carbon in that project, rather than the demolition, which we see so often, people just demolishing property, rebuilding it, incredible amount of carbon involved in all of that. That's a wholly different economic model, isn't it? It's real estate. It's there. It's reconditioned rather than rebuilt, and then you kind of look at the long-term rentals, and you can kind of make an investment decision around that. So you do, across the circular economy, you do get a raft of different business models, and some of them, yes, you need a government price signal or incentive for it to work.
So I think all three of you have spoken or alluded to the role of government and the role of policy in circular economy investing. And I take your point, Ian, around, it's the horses for courses, because you can't apply the same blunt instrument to every part of the sector. Obviously, the waste levy is one of the most visible levers that state and territory governments have in directing investment towards resource recovery, but also mindful that that can also be a bit challenging in some respects, particularly when you've got really different levies and the way that they operate in different places. What are your thoughts in terms of what else governments can do besides waste levies? Are they actually operating that effectively, and is it achieving what it's intended to achieve? And if you were Premier for the day or Prime Minister for the day, what would be the one thing that you would do to catalyze investment in this sector?
Happy to just say a few quick things there. I mean, I think one of the challenges around the waste sector, be it energy, so waste to energy, or kind of e-waste or various other waste streams where there are landfill levies that drive investment in recycling. Every state has a different regime with that, and that kind of creates some challenges. In the past, we've obviously seen a lot of gaming in the waste sector, people kind of taking waste from one state to another where there was lighter regulation, or kind of bringing waste into another state where they might be rewarded for it, even if it didn't have the right provenance and so on. So I think synchronising, regulation around, around waste across the country would be, I think, would be a really great step forward, and it would help this. We're kind of caught in federation again here, and it has become a bit state by state in terms of certainly how landfill levies are operating.
I absolutely agree, of course. I think not only synchronised, but a little bit more commonality in the direction of travel for those gate fee arrangements would be great, but also a bit more prominence for those targets. It's just a general observation, but we've seen this boom in renewables, of course, linked to national schemes like the RET, but also state targets that have had real prominence, and I think have sent powerful message to the investment community. I think if we could see similar prominence around these targets and national commitment, that would help to sort of elevate the sector and get more investor attention. And a second comment I was going to make is, I wonder whether there's a big opportunity for Australia to certainly do more in organics. And I'm influenced a lot by what we see in California, where they have this mechanism, the SB 1383, which looks to have driven a boom in processing of organic waste, anaerobic digestion, typically for either behind the meter applications on farms or straight to the grid. And I think that might be a good policy lesson we could learn from here. And my third comment would be, I'd love to see a bit more leadership and drive on municipal waste or other waste streams in the context of sustainable aviation fuel. I think that would be the three comments I'd make.
Thanks, Ber. I'm just conscious that we've got 1 minute left till the end of our session, so this has just flown through really quickly. There is, fortunately and unfortunately, a raft of questions in the Q&A which we won't be able to get to in time. But if you are able to stick around after the end of the session, you can actually respond to them in the chat as well. I would like to just close the session by just going around the virtual panel very quickly to ask you to leave us with one thought or one key takeaway from this talk on circular investing as to what's your take on the biggest opportunity for us here in Australia in terms of circular investing, and how do we actually take advantage of that? So maybe I might start with you, Mark. Not to put you on the spot.
Look, it's because I come back to, if you include services like car sharing, that's a good example of the circular economy, right? So my initial answer was probably more waste, and that's a traditional infrastructure focus, because I can picture large resource recovery facilities, etc. So that was my initial reaction, but I think if you go back to quite a broad definition of circular economy, then it's you take in a lot of services, and there's a number of very significant opportunities.
Thanks.
I'll leave it at
that. Brer or Ian? Brer.
Okay, well, I'll just share the one thought that's on my mind. In preparing for this talk this morning, I looked at the pitch book data for the number of deals and the volume of deals done in circular economy for venture and growth. And what shocked me is that sort of 90% of the volume are coming. 90% of the deals are coming out of Europe. Australia looks like a very small market. So it just struck me that there's just a big opportunity to develop our ecosystem for venture and growth, particularly in circular economy opportunities in Australia, and Europe really is the pioneer and the leader here. And one other comment I just make is it feels that on the food and ag sector, there's a bit of an opportunity for Australia to really lead. And anaerobic digestion was one comment I made, but also I think around precision fermentation and the switch to alternate proteins. I think that will be a boom market that'll radically transform our agricultural industries over the next 10 years, and good opportunity for Australia.
Maybe just picking up on those, and I wholeheartedly agree with those observations. But certainly technology, I think, again, there's some really interesting entrepreneurs, technologists looking at them working in this sector. We're about to announce an investment in an amazing company that's using chemistry to recycle plastics. Really, another kind of level of chemistry there, which is really, really exciting. As I say, Re-Electrify, great company, recycling batteries. I'm sure there will be a raft of amazing Australian technology companies trying to tackle some of these issues in the circular economy in coming years. So I think that's another place to keep an eye out for some exciting investment opportunities.
And that's a really positive and exciting note for us to end the session on. I'd like to thank all three of you for your time over the last 30 to 40 minutes. It's really appreciated. Thank you for joining me on this really terrific discussion, for sharing your insights with us. And to the audience, I think I would speak on their behalf. I think we really benefited from your insights and your very different perspectives on what you're seeing in this area on investing in the circular economy. So thank you very much.
Thank you.
Thank you.
Thank you, Carmen.